Gold just crashed 9%, silver dropped 30%. And no, it wasn't a market meltdown. It was one name, Kevin Warsh. Trump's pick for the next Fed chair just reshuffled everything you thought you knew about where interest rates are headed. Okay, look, if you're short on time, or frankly, if you have zero reason to trust some guy on the internet with a cat-themed channel name, here's the single most important thing you need to know. The market is betting that the new Fed chair will not be a puppet. Warsh is being priced in as someone who will keep inflation in check, even if that means telling the White House no. That's why gold tanked and the dollar rallied. The money-printing panic trade just got unwound. If you were worried about the Fed becoming a political tool, the market for now is saying you can relax a little. Alright, still here? Cool. Let me properly introduce myself, and then we'll unpack exactly who this Warsh guy is, why Wall Street actually exhaled for once, and what this probably means for your portfolio over the next few years. So, hey, I'm DataCat, and yes, the name is exactly what it sounds like. I'm a data nerd who really likes cats, former corporate slave if you will. I spent years as an analyst inside a Fortune 50 company, buried in the company's legacy data and code. You know, not the kind of portfolio I could flex with, just the boring average type. About 6 months ago I started this channel because, screw it, why not? Now, I'm not going to pretend I'm some finance guru with a Lamborghini in my garage. I'm an introvert who talks to a camera in my spare room. But I do know how to read data, and I know how to explain it without making your eyes glaze over. So if that sounds useful to you, maybe stick around. And if you find this video helpful, you know, a like or subscribe would genuinely mean a lot. This channel is still a kitten. It needs all the help it can get. No courses to sell you, no premium Discord, just free content. That's the deal. Alright, let's get into Kevin Warsh. So here's the situation. Trump just officially nominated Kevin Warsh to replace Jerome Powell as chair of the Federal Reserve. Powell's term ends in May, so we're looking at a 4-month transition period coming up. Warsh still needs to be confirmed by the Senate, so it's not a done deal yet, but assuming that goes through, he'll be running the most powerful central bank on earth. Now, why should you care? Well, for months there's been this lingering fear in financial markets, and I mean genuine fear. The concern was that Trump would nominate someone who would just, do whatever the White House wanted, cut rates aggressively, print money, basically turn the Fed into a political ATM. And look, just to recap, that's not some paranoid fantasy. We've also mentioned this issue in previous videos. Trump has been publicly pressuring the Fed for rate cuts. He's criticized Powell repeatedly. There's been this whole drama involving a DOJ subpoena, debates about whether the Fed chair should consult the president on rate decisions. It's been messy. The Fed's independence was starting to feel negotiable. Now, the thing about central bank independence, it's not just some abstract principle. When investors believe rate decisions are political, they demand what's called a risk premium. They want higher yields to compensate for the uncertainty. As a result, the currency weakens. Inflation expectations get unanchored. It's like letting a cat guard a fish market. Sure, maybe they'll behave, but would you honestly bet your savings on it? So that's the backdrop. Markets were genuinely bracing for a worst-case scenario. Now, back to Kevin Warsh. And who is this guy? Let me paint you a picture, because understanding his background is honestly the key to predicting what comes next. Kevin Warsh is best described as a credible insider with a critic's mindset. He's not some random loyalist. First, he's a Wall Street veteran. Early career at Morgan Stanley. This matters because he thinks like a markets guy. He understands how banks operate, how bonds trade, how investors actually behave. The point is, he's not purely academic, he's seen how the sausage gets made. Second, and this is big, he was a Federal Reserve governor from 2006 to 2011. That means he was in the room during the global financial crisis. He's not a rookie who's going to panic when things get ugly. He knows how the Fed's plumbing works. He's dealt with genuine economic disasters. For investors, that makes him a safe pair of hands, as they say. But you should also know that, since leaving the Fed in 2011, Warsh has been openly critical of the central bank. He's argued that the Fed has done too much. He's talked about the Fed having a credibility deficit. He thinks the institution drifted away from its core job, which is keeping prices stable, and got too comfortable bailing out the economy with easy money. So what's his likely motive as chair? Probably to restore the Fed's reputation as a disciplined inflation fighter, not an institution that swoops in with stimulus every time the market sneezes. He wants the Fed to be boring again. And honestly, boring central banking is usually good central banking. Now, let's talk about money. because financial markets don't lie, they vote with capital. And their reaction to the Warsh nomination was immediate and dramatic. Gold crashed, down about 9%, silver got absolutely demolished, down around 30%. Meanwhile, the US dollar strengthened against other currencies. So what does this actually mean? Let me translate. See, gold and silver are what you might call fear trades. When investors are scared that a government is going to debase its currency, print too much money, let inflation run wild, they pile into precious metals. Gold is basically a hedge against irresponsible central banking. So when gold crashes like this, it's not because something bad happened. It's because something scary didn't happen. Markets were terrified Trump would pick a yes man who would crank up the money printer. That would have destroyed the dollar and sent gold to the moon. By picking Warsh, someone with a track record of criticizing easy money policies, the market essentially said, okay, we can breathe now. This guy might actually have a spine. The dollar strengthening confirms this. A stronger dollar means investors have more confidence in American monetary policy. They're not demanding a risk premium for potential political interference, at least not right now. In market speak, Warsh is being priced as a hawk, someone who prioritizes fighting inflation over stimulating growth, the opposite of those who prefer easy money and low rates. And that hawkish perception is, counterintuitively as it is, a relief to a lot of institutional investors who were quietly panicking. Okay, so what does a Warsh-led Fed actually look like? Based on his history and public statements, here's the most probable path. First, interest rates. You'd think, given Trump's preference for lower rates, that Warsh would just slash them. But I don't think so. I think he'll be pragmatic, not political. Here's the dynamic that I think would play out. Warsh wants to prove his independence. He's been critical of the Fed for being too accommodative, so ironically, he might be less willing to cut rates aggressively than Jerome Powell would have been, unless the economy is genuinely falling apart. Expect a slow, data-dependent approach. Cuts will happen if inflation stays low, but don't expect him to hand out rate cuts like catnip at a shelter. Second, and this is the part most people miss, watch the balance sheet. This is kind of the Fed's hidden lever. Warsh has long argued the Fed owns too many bonds, especially after COVID. He wants a smaller footprint, so expect him to favor either stopping bond purchases or actively selling them off faster than expected. And why does this matter again? Because even if interest rates go down, shrinking the balance sheet tightens financial conditions. It's like quietly draining the pool while everyone's focused on the water temperature. The effect is real, even if it's less visible. Third, institutional reform. Warsh has used the phrase regime change when talking about the Fed. Now, that sounds dramatic, but he's probably not planning to burn the building down. What he likely means is simplifying communication, less academic jargon, more clarity, refocusing on the core mission, inflation and employment, and staying out of side debates like climate policy or social engineering. Now look, I'd be doing you a disservice if I pretended this was all smooth sailing. There are real risks here. Risk number 1, Senate confirmation. This is not a done deal. Some senators have already threatened to block nominees over unrelated political disputes. Senator Tom Tillis, for example, has made noise about holding up Fed confirmations. So there's a chance this gets messy before it gets official. Risk number 2, the Trump-Warsh dynamic. Right now they seem aligned, but think about this. Trump wants low rates to boost growth. Warsh wants sound money to stop inflation. What happens when the economy slows down and the White House wants emergency rate cuts, but Warsh says no? That's when the real test comes. And honestly, I have absolutely no idea how that would play out until we're in it. Could be fine, could get contentious. It's like introducing a new cat to the household. Sometimes they get along, sometimes there's hissing at 3 in the morning. So to put it in simple terms to avoid confusion, I'd say that this nomination of Kevin Warsh is being interpreted by the market as a win for stability. He's a known quantity, he understands the system, but he also wants to reform it. For regular people, for you, this likely means a stronger US dollar, a continued fight against inflation, and a Federal Reserve that's less likely to intervene in the economy unless it absolutely has to. Is it guaranteed? No, nothing in markets ever is. But based on the data we have right now, this is a more conservative, more disciplined Fed than many feared we'd get. If you found this breakdown useful, I'd genuinely appreciate a like or subscribe. It helps the channel grow and it tells me this kind of deep dive content is actually what you want. No gimmicks, no premium memberships, just me, some data, and occasional cat references. Thanks for watching. DataCat out, and I'll see you in the next one.